So the intersectionality, right, that's a word they're using these days, between pop culture, the First Amendment, and celebrity influence, all on full display after Neil Young demanded that Spotify remove Joe Rogan from its platform. In a letter to his manager and label, Young made it clear Spotify could, quote, have one or the other, but not both. Interestingly, shares of Spotify have been hammered since, down over 20% from the 20th of this month to the low today. So what's an investor to do? I'm going to bring in Walser Wealth Management President Rebecca Walser. You know, Rebecca, so now I'm hearing that there could be more artists who make the same demands as Neil Young, and maybe that starts to hurt Spotify, the company and the stock. If you owned the stock, what would you do?
Well, I would hold it. And I got to say, Charles, I think Neil Young lost his heart of gold or his pot of gold on Spotify. They didn't seem to even blink with that. That's just because Joe Rogan has 11 million listeners to every episode. He's got one of the most prominent voices. And I have to say, you know, censorship in America? Why? If everyone's points that disagrees with Joe Rogan are so valid, go on a show and debate him and make your points and show America that he's a fool and he doesn't know what he's talking about. But censoring really makes people skeptical. They say, why do we need to censor somebody? Why can't we just have open and free debate? That's what America is about. So I would buy Spotify because unless they get rid of Rogan, and then I would sell, because I think absolutely they need to be supporting Rogan in this matter. This is free speech. People are listening to him, and if your points are valid, you should be able to debate them.
All right, buy the dip and buy Rogan. You know what?
That's right.
What do you make, though, right? This woke movement, it is pushing corporate boards around. They've been extraordinarily successful. In fact, most of the time, these boards actually fold. And for me, though, I think it's starting to backfire often. You know, for instance, take a look at CVS, right? This is a stock that it's up big time. It's over the last year or so, it's up about 70%. Now, they've closed a lot of stores in a lot of neighborhoods across this country, mostly because city officials are too lax on crime. The shareholders obviously are making out the stock is through the roof. And they probably, it's one of the reasons they're up through the roof is that those locations they closed probably were underperformers because there's still crime there. Now these people who live in those neighborhoods don't have drugstores. So these board of directors, you know, that are just, instead of taking a more proactive approach, they're actually able to move stores out of neighborhoods they don't want to be in the first place. And I don't think anybody wins except the shareholders.
That's exactly right. You know, Charles, this woke culture has... how do you even describe it? You know, we cannot run companies based on the whims of a progressive left or a conservative right. We have to be America. And, you know, you have policies like in San Francisco that don't anymore penalize crime for shoplifting up to a certain level of value that you stole as you walk out the door. You see that these stores have to leave. I mean, they're leaving in droves. These communities are going to be decimated. There's going to be nowhere to shop because the criminals literally are running the streets. This is outrageous, Charles. We have to get a handle on this. It's time. CBS is back up to its almost high from 2015. That should tell corporate boards something.
Yeah, you know, I just think that unfortunately the losers are always the people that, you know, really need to help the most. Hey, I got about a minute to go. I got to get your thoughts. The Federal Reserve, how this market's been acting. What are you telling people?
Yeah, I'm telling people to be prepared and buckle up. It's going to be volatility. I mean, we have really kind of been backed into the corner really since 2008 and too big to fail, quantitative easing 1, 2, 3, and on and on. And now we go from 120 billion of stimulus and, you know, basically almost a zero interest rate to runoff and potentially 3 to even more rate hikes. And so this is a really difficult water to navigate and choppy waters ahead. Be prepared. Value stocks, play the game, but be safe because it's going to get choppy out there.
Real quick then. It sounds to me that then if Powell does the right thing, which it might be too late, you know, we're talking, you know, all the money that they printed up, $9 trillion total. There's no way he could avoid either crushing the economy or crushing the market, right?
That's it. You have to pick up. That's why you're rocking a hard place. Either you have to control inflation, or you have to watch this market fall, and you can't have it both ways. You cannot, like I've been telling you, Charles, forever. MMT is not the recipe, and this is exactly what it leads to here.
Free money. It's fun though when you first get it. You got to admit that. The hangover, maybe not so much.
I like the highs, but I just want to capture them and just hang on. You know, I want to ride up. I don't want to fall down.
No, you don't. Not this way. Rebecca, thank you very much. All right, folks, coming up with the more active Fed now. The question is Tina still the rule of investing? I'm going to ask Jim Bianco. Also next, Jerome Powell admits that there is no end in sight for the supply chain crisis. So we're going to go live to Southern Port and tell you exactly what it means for you down the road.
I tried so